Let's pick apart this story with Alessio Terzi. He joins us from Bruegel, a European think tank that specialises in economics. We heard it there from Uli, and just to quote what Mr. Draghi had to say, the ECB has a readiness, willingness and ability to act in the event of any economic fallout from a Brexit. He's really trumpeting this message home that the ECB will do anything. That's what analysts want to hear at the moment, I guess.
Indeed. We're at a moment in which we don't really know what the fallout of Brexit will be. It might be very mild if the UK and the other European partners manage to find a manageable trade deal, or it could be quite nasty. And we haven't seen any sign yet of what this will look like. But Mario Draghi, as you say, said that everything is on the table and he's ready to act with all the instruments within his toolkit.
So what we're seeing on financial markets at the moment is a delayed reaction. The ECB is certainly not delaying, is not holding back as far as its language goes. It's certainly standing there very strong to say it's willing to help. What can the ECB do, though?
Well, the most obvious reaction to a fallout of Brexit would be to either extend or potentiate the current bond buying program. So the ECB is currently buying $80 billion worth of asset every month, and this will run out in March 2017. What the ECB can do, and it already has hinted at it, by saying that the program ends now in March 2017, but if the inflation developments have not are not more in line with what the ECB wants, so this 2% target in the medium run, they're ready to further it or step it up.
And what happens if Italy's banking crisis suddenly gets worse in that time?
I doubt that, in the sense that Italy's banking crisis is not a massive crisis. It is a crisis in the sense that we have to understand how to manage it within the current European framework of rules. We have the BRRD, we are in a bail-in sort of setting, so private sector investors should take a hit. It cannot be like the good old days when just the government would give a blank check to the banking system. And the Italian government is saying, hold on, we have Brexit, we are in a special environment, there are risks to the financial stability of Italy, of the euro area, so we have to manage this somewhere in between. There will be some private sector involvement probably, but the government will somewhere intervene.
But is it another case of north-south divide here in Europe on this topic? Because the rest of Europe's had to get its banking sector into a good position with reserves, enough capital, and the Italian banks, their books are full of bad loans.
Indeed. I think this is, let's say, the north versus south divide is a bit unfair in the sense that Spain had a banking sector program, so they did restructure their banks. Italy couldn't because it had a very high level of public sector debt, so it couldn't intervene and just pump money into its banking sector, and so it didn't do that in a pre-bail-in world.
OK, Alessio Terzi for us. Thank you very much for coming in today.
Thank you, Ben.